how are you? This is Patrick from TSHFX Institute, and today we just added the 800 moving averages. The 800 moving average is the blue one, so I'm going to show you how these 800 moving averages work. So whenever we get on the 15-minute time frame, whenever we get a 800 and a 200 cross, it means that on the 1 hour time frame, the 800 EMA will be our 200 EMA. So for instance, where I draw the arrow, you can see the 800 and the 200 cross, but if I change to 1 hour time frame, we can see that it is a 200. So whenever we get a 5200 cross, it means that our peak formation has been locked in. So this is the low of the week. It means that our peak formation has been locked in. And then if you can also see here, we also have 200 and 800 cross. If we go on the 4 hour time frame, it means that there is a 5200 cross also. So you can see we also have 250 cross. So let's go into the chart and analyze and see how these markets are moving. So as we can see here on the 4 hour time frame, let me just draw my support and my resistance zones. This will be my resistance zone and this will be my support zone. This will be my resistance zone and this will be my support zone. So this is how we are going to do it. So we can see on the daily time frame, if I go on the daily time frame, you will see there is a 800 moving average. So the reason why we got this 800 moving averages is because we are having a head and shoulder pattern. We can see here we're also having a head and shoulder pattern, and this is our left shoulder and this will be our right shoulder. So let me just draw the arrows so you can see. This is our left shoulder, this is our head, and this is our right shoulder. So when we get our right shoulder, it means that the market will move up and go to test some resistance levels. So the market might move up to this zone but we are not sure. We'll wait and see how the market reacts. Let me go into the 15-minute time frame and see what happened this whole week, so that we can know how to trade these kind of market conditions. So we can see this was today, which is Thursday, this is Wednesday, this is Tuesday, and this is Monday. So first thing you do is you draw your psychological support and resistance from the Asian session of Monday, which is here. You can see I draw here my session. So you can see that pattern which I showed you guys. The pattern is all here. Let me just draw it. We're having our accumulation zone, and then from our accumulation zone, the market will move out and give us my first leg, then move away from the first leg, give me my second leg, then the market will shoot up. This is one beautiful pattern which I showed you guys. So let's see what happened here. So we can see here from Monday, the market moved up and then gave us a M, and then the market dropped, and from there on the market gave us a moving average bounce, and then from there on, after this moving average bounce, the market shoot up. So let me go deeper in the charts and explain why we had this kind of movement. If I go into my 1 hour chart, on my 1 hour chart, what I told you guys is that what the market does is the market will give me a 5200 cross. First thing, I'll get my 5200 cross, and then from there on the market will move away from the moving average and then the market will come back and test moving average, and then the market will continue up in the direction. So you can see here we had our peak formation, then the market came to retest the moving average, and then from there on the market went up. So this is how we also see the market in a bigger time frame. You can see we had 3 levels of rise. We had our first level, of rise up until here, and then we had our second level of rise, and then we had our third level of rise. So let me just remove this so we can go into the smaller time frame and see how we got these setups. Let me remove this and go back to the charts and see how we got this setup. So we will go into the 15-minute time frame and see how many entries we could have got this week. So let's start on Monday. So this was Monday. We got a very nice, beautiful setup. You can see this is a very nice, beautiful setup. You can see the market was in the Asian range, and then from there on we got a stop hand high. The market gave me the first leg, and then the market gave me a second leg, and then a third leg. So I also want to tell you that whenever we're in a stop hand zone 25 to 50 pips above or below the Asian range, whenever we get 3 hits on the high or 3 hits on the low, that's can make the setup also very powerful. So you can see it was a very nice trade. We took this trade somewhere around here, I think, somewhere around here. Took this trade here, and we just rest like I think $20 to $30, and then look what happened. The market dropped. So this was a very nice setup. You can just go and check it. It happened on Monday. So the reason why I have 3 moving averages, it also helps you to just draw this. Whenever you are trading back to the moving averages, you get 3 targets. The reason why I'm saying you get 3 targets is because just look what happened here in the market. This was first target, which was the 50, and then this was the second target, which was the 200, and then our last target was the 800. So that can also help us to identify targets in the market. And then look at the second day. The second day we got this entry based on what the 1 hour time frame is telling us. So what the 1 hour time frame is telling us is that we had a 50-200 cross, which gave us our peak formation low. This was a 50-200 cross, which gave us our peak formation low. And look what happened. The market came to test the 200 EMA, and then the market shoot up. So we can see, let's see if we get more patterns. So we can see on this day we also got a nice, very beautiful pattern. Let me go into the 15-minute time frame so you can see these beautiful patterns. It is appearing on the market each and every day, so we can execute on these trades. Before we had this, all this move, look what happened. We got a nice buy setup. I think, yes, we did also take this trade. I think we bought this trade somewhere around this area, and then we raised a small percentage of our account. I think we took this here. We took a small percentage of this account, and then the market shoot up. market shoot up, the market shoot up to this zone. Okay, I can say up to that zone. So you can see here we had a very nice entry here. So you can see on this day, let me just put this into a darker mode so you can see. Let me put it this way. This way so we can see what I'm trying to explain on this chart. Let's put it there so we can try to explain what happened on the chart. I think this looks very beautiful. Yes, we'll keep it this way. Okay, so you can see here what we got is we got a nice stop and low at this area. Look what happened. The market came to test the moving average, the 200 moving average, and then the market shoot up. We were already having a peak formation low. You can even see on this day we also got a nice beautiful pattern here. We also got a nice beautiful pattern here. We also got a nice beautiful pattern here, which you could have executed. So it's not a matter of we are not getting clear setups. The setup is there each and every day. Whenever you do not get a pattern, just wait for the next day or just scan around and check. You will find an entry. So we took all these entries. You can see here was the previous day. Previous day's low were walked. And then look what happened. The market shoot up. So this was your first trade. Boom. You take profit there at the moving averages, which I told you guys that you take profit at the 50, which is take profit 1. You take profit at the 200, which is take profit 2, and then take profit 3 on the 800. So you can see this day we had a nice trade. This trade hit our take profit. The second day we had a nice trade, hit our take profit, and then the third day you can see what happened. We also took another entry, which was very clear. So this was also our 1 hour trade. This was our 1 hour trade. This was our 1 hour trade. So just risk here. We risk a very small amount of our capital, and this was our target. So I did not take a trade here. I took a trade that I took my trade. So I took one trade here, and then I took another trade here. So let's go back into the chart and see. You can see this was a very nice setup. The previous day's low were also walked, and then you can see the market just came and almost tested the 800 moving average, and then the market went up. So if we had a nice second leg, for instance here at this area, the market came back to test this low, we would have had a nice beautiful setup, which is our signature trade. And then look, on this day, which was yesterday, we also got a very nice pattern. Also we also took an entry at this. We also took an entry here. We also took an entry right here at this area. You can see how our risk, we risked a very small amount of our capital, and look at the gain. We gained so much out of this day. So we can see here we had the accumulation zone, and then we had the first push out of the Asian range, second push out of the Asian range, and then the third push. And then the thing that made this entry very beautiful is that the market came back to test and then we had our 1350 cross right here, which gave us a safe entry. So you can see on this day what happened is the market just came to this area. Market gave us 3 hits to the low, and then you can see what happened. The market also shoot up, but we did not take an entry here. We just took an entry here at this zone. Sorry, we took an entry right here at this zone. It was a buy, yeah. We went long at this zone, which was on Wednesday. So we took a trade here. This is a trade that we took, and just look how the market went. The market went into profit. You can see. So we're having multiple days of rises. It means that we are in an uptrend. So these are the kind of setup we look when we get a 5200 cross, which is our peak formation on the 1 hour time frame. So you can see this was the first trade, second trade, third, fourth, fifth. We had 6 trades from last week Friday, I think. Yes, we had 6 trades. Just look at this. You are risking small amount of your capital, but your gains are very big. This is how you boost your equity club. This is a very nice setup. If you go on the 4 hour time frame, you can see if you go on the 4 hour time frame, it's like you having a bigger picture on where the market is going, and you can see that this was our zone. This is our zone. You can see this is our zone, and this was our previous zone, which was also which we also had a break. We also had a break and a retest. We had a break and a retest at this. So this is how it works. You can see at the break and the retest, you can see what happened. We had a stop on low, and then the market rise up. So we are expecting the market to come to these zones. These zones which are drawn, the market can come to one of these zones. Depends, might get entry in the London session, or we might get an entry on the New York session. So this is how the market works, and this is very simple way for you to approach the market. So whenever you come to the market, you cut all the noise, and then you just focus on that specific setup, which we know that it is going to give us a very nice high win rate. So this was very nice. This was the area where we had a break and retest. You can see the arrow is pointing. We had a break and retest on the 4 hour time frame, and you can see in the 15-minute time frame, like you already know when the market is breaking and retesting. After the retest, you know where to take your entry, and this is basically where your entry is. So this is very nice setup. Yeah, this is where you take your entry. So whenever the market is also, another thing which I also want to tell you is that whenever we see the market is, all these EMAs are fanned out, it means that we are in an extreme zone. You can see EMAs are fanned out. It means that whenever we get a stop at high, we are going to sell and take our targets at these EMAs. These are going to be our targets, and it also shows us a trend. Let me just go back to the chart and see what happened. So just look what happened here. What I'm actually talking about is this kind of setup. So you can see here, the market came out of the Asian range. Market came out of the Asian range here, and then the market walked this high. Market walked that high, and then the market dropped from that point. And you can see the market dropped from this point to the 50, which was our first take profit, 200, which our second take profit, and then the 800, which is our third take profit. So these are the kind of setups I want you always to take. These are beautiful setups which you can risk a small amount of your capital in order for you to grow your account. You can see this is a very nice trade up to here. This was a very nice trade. This was a very nice trade. You can see. So what I was actually saying is that when you are in the uptrend and you see the EMAs are fanned out, it means that the trend is starting to exhaust and you might change to a sell, or you might change to a buy. It depends. Just use the same approach which I taught you now. So you can see whenever you see the EMAs are fanned out, you must also draw like an arrow just to show you that, oh okay, my EMAs are fanned out. It means that anytime soon we are going to sell. Let me just look at another example again and see. You can see also here, it's also another example. You can also see here all these EMAs are fanned out. You can see, you see market came back to test these support areas. Market gave us a very nice top hand. Market gave us a very nice top hand low, which was first push out of the Asian session, second push out of the Asian session, third push out of the Asian session. You can see these lows were also walked. These lows were walked. These lows were walked. You can see the market walked these lows, and some traders took this as a sell, but we are not in that game of gambling. Some traders took this as a sell, but we know that this is a stop hand low, and this is where we are going to risk a small amount of capital in order for us to grow our account. So let me just show you. If you risk here, that could have been your entry, and these could have been your targets. Understand? So this is how we are going to approach the markets. I hope you learned a lot from these markets, and it's all in there, it's all in there, it's all in there. I can repeat myself here. We have a 5200 cross. Then you can see the market came to the 200, bounce, drop. Here again the market came to the 200, stop hand high, then the market drop. I think this was news. We also did a video on this also. This was news. We also did a video on this also. You can see it was a very nice trade. Very nice trade. Just at the 200. Stop loss will be very small and very tight. Just look, one candle in 15 minutes, you already doubled your account. Just in 15 minutes. Look, these are the kind of setups that I want you to take. It's very simple, and you will not always be in front of the charts. You will have time, free time for you to have with for your work or for your family. It depends wherever you use your time, and you will only come at the market at a specific time, and you will only look for some confirmation. And whenever you get a setup, you take your setup, you use a proper stop loss, and take 50 to 100. Sometimes the market can go even 250 pips. Sometimes the market, if you analyze and do these kind of trades on a 4-hour time frame, you can get up to 1000 points also. So this was a very nice week for us. We can see we had lots of multiples of setups. So the setup is there almost each and every day. Whenever you don't get a setup, just close your charts, and then the next day come to the charts and check. I'm sure you're going to get a setup, at least one setup in a week. So that's for me, Patrick. Hope you learned a lot from this, and don't forget to subscribe to this channel, like this video, and also hit the notification bell for more updates, so that whenever we upload a video, you will be the first one to get a notification on your phone. So that's for me, Patrick. Thank you very much for your time. Hope you enjoyed this and hope you learned a lot from this. Let's push for greatness.